You're listening to Ramble with Intent. I'm your host, Lisa Szabon-Smith, visual strategist, advocate, ambition guide, and public speaker. Let's ramble.
Oh, Shaun. Great to be here. Yeah, you know what, Lisa, if I was any better, I'd need to be two people.
Right? Yeah.
Life's good. Life's real good.
That's great. That's so great. So, let's just dive in. I want to know, so you came from EMS, from the emergency services realm. So what happened in that life that made you start thinking about there's something more, or I can start making my money work for me?
Totally.
What happened there?
Yeah, well, I think if I was to reflect back on it, I kind of always knew that working a job for 35 years to live off of 60% of what I was making already was just not going to be the future. And I needed to do other things. And so I was like, I had rental properties and different things like that. And I was trying to invest money in the stock market. And what happened for me, specifically with the investments and stuff like that, is I pretty much lit a match to about 50 grand in a matter of 6 months. I was just taking tips and advice from friends, and I was like, okay, here we go. This is going to work all in. I mean, not all in, but a lot of money for me at the time. And I fell very flat on my face. And so I was like, okay, this isn't working. I need to do something different, right? And so two things were kind of happening simultaneously. I knew that I needed to figure out the money game and figure out what I was going to be doing there to get ahead, because I didn't feel like I was getting ahead at all.
No.
And I was also simultaneously starting to experience some things with my job that weren't really sitting very well for me. I love people, Lisa. I am a natural introvert, honestly, at heart, but I love being with people and helping people. It's in my DNA. It makes me feel good. I wasn't a paramedic because I like the sight of blood. I just love helping people, right? And so that was great. But when I really kind of sat down and analyzed it, I recognized I needed to find a way to get control of my time. Mm-hmm. Because when you're a paramedic and it's your day to work Christmas, guess what? Yeah. You're working Christmas.
Yeah,
and I needed to change that. I was tired of missing occasions with my family. I was also looking for a way to work really hard at something and get ahead. And for me, it didn't matter how early I showed up or how late I stayed. What I got paid is what I got paid. And, I was staring down the pipe of another 15, 20 years with the Airdrie Fire Department. And I was like, okay, well, how do I grow? How do I get ahead here? And when I kind of, explored that a bit, as hey, is there courses I can take? What can I do? The answer was simply well, you just got to wait till your captain retires. And I'm like, he's never going to retire. He's got the cushiest job in the world. He makes 22% more than I do. And there's really nothing I can do about that. So I was starting to feel frustrated from that perspective. Totally. in just being kind of a cog in the wheel.
Yeah.
And then the final thing was I wanted to find a way to start generating passive income.
Yep.
Because all I'd ever done my entire life was trade time for money.
Yep.
And so it's crazy how the universe works, but in the process of trying to solve the money problem, we came across a gentleman who's now a very, very good friend of mine. And he provided me at the time the best financial education I've ever had in my entire life.
Amazing.
Shaun, here's how money works. Here's what your options are. Here's how it grows. Here's how you create a plan. It gave me everything I was looking for in 45 minutes. And it was I fell in love with the empowerment of financial literacy and financial education. And then fast forward 6 months, I had left the fire department. I had moved back to Victoria, Heidi and I together, and we felt like we had figured out kind of the money thing a little bit, but there was still what are we going to do for the rest of our life? Because Heidi was getting burnt out being a nurse, and I most certainly still was not happy, being a paramedic and a firefighter. And so that's when the opportunity to open an office here in Victoria kind of came to light. And the man, the gentleman, he's a very close friend of mine. He's a great mentor. And he said to me, Shaun, I've got people looking for our services every single day in Victoria, and I have nowhere to send them.
Oh, wow.
Would you consider doing this?
Yeah.
And I'll be honest with you, I was pretty skeptical, Lisa. I didn't have kind of the open abundance mindset that I do now. So I was very kind of cautious and skeptical. But the reason I got started was because I recognized I was going to get an opportunity to go through our mentorship program, get a license that I owned, and get paid to manage my own stuff.
Yeah.
And so I did that. I went through our mentorship program. I instantaneously made more money by taking over managing my family's financial affairs than it cost me to get my license. And so I was super happy with that. I started kind of, sharing that message and asking some questions with a few people that I knew here. And in a short period of time, I recognized two things. I recognized, first of all, that I liked it. I liked helping people in this capacity. It was a lot different than get in the back of the ambulance, there's your morphine, there's the hospital, see you later. I was building real relationships. I was helping parents do things for their kids, helping parents, build a plan for the future, helping business owners, become more profitable, pay less tax. It just felt fulfilling for me. And then the other thing that I recognized is that no one else is doing it. No one else is meeting with middle-class Canadians and offering them an opportunity to learn about how money and finance works. And so that's when I cut the cord. And in 2015, we let it all go. We let our paramedic certifications expire, our nursing certificate, it all just kind of evaporated and we got started.
That's amazing. So let's go into let's start with the financial literacy. Obviously, it's a huge thing that we think we know, but we don't know. That's the number one question. Both my husband and I are self-employed, and we both question, how can we make our money work for us? How can we start making it so that we don't feel like you said, it's coming in and then 60% of it is gone? How do we start building a future so that hopefully he can retire at 60? I can retire at 55, those types of things. So let's start there. Financial literacy. It's more than just credit and debit.
Yeah.
And we need to understand it so that we can understand how to work the system to our advantage, not to their advantage.
100%. Yeah. If you don't understand how to work the system, then the reality is the system's working you. Yeah. So that's a really great question. There's so much to unpack there. I think honestly, to start at a 30,000 foot view, what I normally help most people with is start with most people is just starting with an understanding of a good money mindset. Most people approach money from a scarcity mindset, not an abundance mindset. And when you are approaching anything from a scarcity mindset, guess what you are very apt or exposed to do, and that is be fearful.
Yep.
Right? And so, you fall into the trap of banks that offer guarantees. You have your money and then you hold it tight and you also don't have good self-talk around money. No. And this I hear all the time. I hear people say, "Oh, Shaun, I'm just so bad with money," or, I've never been good with money, or I've, this, that, or the next thing. And it's like, stop talking that way. Right? Because when you start having negative conversations with yourself about money, guess what happens? Your subconscious mind brings all of that into your purview. Yeah. Right? And that starts to become your identity. So step one is lose the scarcity mindset around money and start to adopt an abundance mindset and audit your self-talk. Yeah. Audit the conversations you're having with yourself, right? Because that's really fundamentally what thinking is. Mm-hmm. Thinking is the process of asking and answering questions to ourselves. Yeah. Right? And so you really have to be clear how you're, or I should say audit how you're doing that and the types of questions you're asking yourself. So that's step one. Step two is just, empowering yourself with an understanding of how the system works. You said it really well, we think we know, but really it's a dangerous spot to be because it's not about what you think you know, it's about what you think you know that's actually not true.
Yep.
Right?
Yep.
And so we have to take responsibility and ownership over creating that level of understanding with ourselves. A great example is, people get so caught up about, their credit score. And we've been conditioned to think that, oh my goodness, this credit score is so important. Well, Lisa, let me ask you a question. How much money did your credit score pay you yesterday?
$0. And having zero debt puts you as the enemy of the bank versus being a really good consumer.
Totally. And that again, you have to understand how the system works, right? Like, not only how does the system work for us, like how do we need to work the system, but what do we also have to guard ourselves against from what the system is providing? Because make no mistake, debt is the new slavery.
100% is.
And when you walk into those big institutions, the most profitable thing that they can sell you is debt.
Yep.
And that looks like new credit cards, that looks like lines of credit, that looks like extensions in your overdraft, all those things.
Yep.
Right?
Mortgages, everything. Yep.
Totally.
Yep.
And I mean, don't get me wrong, there is such thing as good debt. Right? Like, mortgage is a good example. If you don't have $1 million here in Victoria, does that mean you just never get to own a house? Well, no. But it does mean, but you could create a situation where you have debt on an appreciating asset, right? You have to live somewhere, you need to pay, right? So there is such examples of good debt, but the majority of the debt that Canadians hold in their household is consumer debt.
Yep. Oh,
right?
yeah.
And
the things we don't need, but our friends had one too, so we wanted it as well. Absolutely.
Exactly. And I say to people all the time, listen, you need to stop trying to keep up with the Joneses, because here's the reality. The Joneses are broke.
And they're not keeping up.
Right? They don't own the cars. They don't own the fancy trailer. They put the vacation on their credit card every year. You're going to chase them into bankruptcy. Yep. Right? So stop trying to do that. I can't tell you, like, I drive a car that has rust on it. And I love it. Yep. I don't have $1,000 a month car payment, and I love it.
Yep.
And I just I because of my money mindset, I take such huge value in that. I take such huge pride in that. Yep. I don't give two hoots what you think of my car, because I'm saving over $10,000 a month right now as a family. So
And it still does the same thing that the other car requires, or that you require of the other car as well, right? Point A to point B, carries some stuff. We're good.
Totally. So, I mean, I kind of went off on a bit of a tangent there.
That's
but
okay.
you really do need to understand the system.
Yeah.
I can't tell you how often I sit down with people, or we as an organization sit down with families, and we'll see them in the situation where they have, their wealth and their investments, and their debt at the same institution. And we'll take that apart for them. We'll say, okay, listen, do you understand the concept of calculating the growth of money, right? Because this is one of the things we teach people. It's how to calculate compounding interest. Right? And Albert Einstein said it. Either you understand compounding interest and it's working for you, or you don't understand compounding interest and it's working against you.
Yeah.
And here's what he means by that. This is the classic Canadian family. So if you have a balance on your credit card and you carry that balance over on a month-to-month basis, the average interest rate on a credit card is around 20%.
Yep.
So that means the balance on your credit card is going to double every 3.5 years. Because it's got a 20% interest rate, right? But the same institution that gave that family those credit cards is also managing their wealth. And they've provided a guarantee for that family of 4% a year. Well, that means if we calculate, use a compounding interest calculator, or use the rule of 72, that means your debt is doubling every 3.4 years.
Yeah.
And your wealth is doubling every 18 years.
Not fast enough. Nope.
It's pretty hard to win the money game when your debt's doubling every 3.4 years and your wealth is doubling every 18 years.
Yeah.
Right? So again, this is where the financial literacy comes in. This is where the helping people understand that, because people fundamentally know that they want their wealth growing faster than their debt. Right? They fundamentally know that. But the big problem is that they assume that those big institutions that they trust have their best interests in mind, and they're going to support them through making that happen. And it's just not the case.
No, and number one question you have to ask is, if a bank is designed purely to hold money, how come they're the top profiting corporations every quarter? And it's, so if they're profiting, they're not just holding money. They are making money off of every single user. So enter, how do we start making our money work for us?
Yeah. Well, so first of all, I think it starts with good savings habits, right? Mm-hmm. Wealthy people and the average ordinary people, they manage their money two different ways. Average Canadians manage their money emotionally, which means they spend first and then they save what's left after spending.
Yep.
Wealthy people got wealthy because they manage their money habitually, meaning they save first and then they spend what's left after savings, right?
Yeah.
You heard the wealthy barber talk about pay yourself first, all that kind of stuff, right? So it starts with those good saving habits, because here's the reality. And again, I hear this all the time from people as well, especially business owners. Oh, Shaun, next quarter, as soon as I start making more money, then I'm going to put together a savings plan. And you've already lost, right? Because if you can't figure out and create those habits to learn how to save money when you're broke, I'm talking $10 a month.
Yeah.
Then you're never going to do it when you're wealthy, right? If you can't manage 50 grand a year, you're never going to be able to manage 500 grand a year, right?
And that comes back to mindset too, being comfortable with seeing that money go away from your pocket, because it's that delayed gratification in the long run.
Totally. Yeah, totally. And that's why, again, it's just supporting people with that process. So managing your money habitually, not managing your money emotionally, right? And actually creating good savings habits, because people would be absolutely blown away at the power of time and compounding interest put together. Like, it is absolutely incredible. This is why I love helping people set things in motion for their kids.
Yes.
Because your kids are so young, they have time. Time is the most valuable asset any investor has.
Yeah.
Right?
Yeah.
And so helping people understand those savings habits and how to do that, that's step one. And then how do you get value, right? How do you get your money working hard for you rather than working hard for the institution? And, there's different ways to access professional money management. Sometimes people like to go and do it themselves, through online investment trading accounts, those kind of things. There's nothing wrong with that. But I can tell you, for the majority of people, that doesn't work out, just because, again, of the emotional connection. Like, in Canada, people do 60% better on average working with an advisor than working without an advisor.
Yep.
And so we have to ask ourselves, why is that? And I would like to submit to you that it has nothing to do with products.
Nope.
It has nothing to do with this investment, that investment. It's having an emotional relationship with someone. Right. And that's why I can tell you, Lisa, like, for us, here's what I see. The traditional industry is integrating technology. They're using AI, robo-advisors, all these things, right? They're pouring all this money into technology and moving faster and all these kind of things. I am moving in the exact opposite direction.
Yeah.
I believe in the power of human beings and relationships, especially when it comes to something so emotional for people, which is their money.
Yeah.
And so that's why I believe people with advisors historically do a lot better than people without.
Yep.
And so you have to have that connection. You have to have that emotional relationship, I believe, with someone, or you have to be able to take it on yourself. And that's a possibility. You can definitely do that. It just doesn't always work out the best for people.
No, and then the advisor is also like your filter, if you will, to a decision you're about to make. So they're the person that, in essence, you're paying to see the long-term plan rather than that immediate need or whatever it may be when you're trying to access your money. So they're the gatekeeper of your future. In a sense. Yeah. Totally.
The client's ultimately in charge. And that's what I always say to people is, like, go interview some people, go interview some advisors. But the challenge, again, Lisa, is that there's not, like, the average age of the advisor in Canada today is north of 60.
I know.
Right? Yeah. And so they're retiring. We already don't have enough advisors to help human beings. That's why the traditional industry is going towards robots.
Yep.
right? And so we need more licensed and trained people out there helping families, providing the education, creating the relationships, helping them understand the system, how it works, all those kind of things. There's never been a greater need for financial literacy when it comes to North Americans.
I would totally agree. Just from looking around and seeing how our economy is responding to inflation alone right now, it's quite clear that financial literacy, myself included to some degrees, that we missed a mark and we need to start learning and getting back on track. Yeah. So in terms of getting into being an advisor, what's that process for someone? Say, even if you're a high school graduate or a college graduate and you're not quite sure what you're doing, what an industry to jump in when there's a need for bodies right now.
Totally. Yeah. There really is. There's never been a greater opportunity in this industry right now, especially for young people. And I think, the first thing that slows people down is they just don't feel qualified. They're like, well, Shaun, I don't have, an MBA. I don't have a PhD in economics. And that's another kind of lie that the traditional industry has told us, that you need to have all of this high level qualification in order to help people in this capacity. And that's just not the truth.
Yeah. Sorry, I have a dog barking in the background right now.
That's okay. No problem. It's all good. Yeah. So I think the first real piece is understanding that really what it takes to be in this industry is you have to draw satisfaction from helping people, right? You have to be comfortable with that. You have to be comfortable with, learning new skills. Financial services can be a new language, but for me, when I'm taking someone under my wing and I'm supporting them through the process and helping them get licensed and do all those kind of things, the biggest thing I look for is someone that actually truly cares about helping people. Because this industry, I think, has a lot of people in it today who aren't mission driven, they're commission driven.
Yep.
And I that's just not a road I really want to go down. Don't get me wrong, we get paid very well here. Financial services is the highest paying industry in the world. But for me, with what we do, I want to make sure that we're licensing and training new people whose primary objective is to make sure that they're leaving people better than they found them.
Yeah. And I mean, isn't that how we should operate as humans in general?
Yeah, I would agree with that for sure. Yeah, for sure. So I mean, we've got a lot of different people going through our mentorship program right now, Lisa. There's some people that are going through our mentorship program to achieve what I described in the beginning in terms of what I wanted, right? Was just a better understanding of how the system works and ability to kind of get paid to manage my own stuff.
Yeah.
There's people that are going through our mentorship to do that. And I love that we're able to offer that. There's people that are working kind of on a twin career basis where they've gone through our mentorship program. They are, getting paid to manage their own financial affairs and take care of those kind of things. But then they're also, generating compensation. They're opening up extra streams of income by referring people to us, right? And so these are obviously people that we wouldn't have gotten in front of otherwise. And so these are the mortgage brokers, the realtors, the accountants, those type of people. They carry a license with us so they can refer people to us. We can take care of them, and then they generate in the compensation and they get paid for those referrals. Yeah. We've got a lot of those type of people in our mentorship program, and then we've got a demographic of people who are here full time, much like myself, and they love sitting down and supporting people on a one-on-one basis, and have replaced their income. And really just want to, take advantage of what the industry has to offer, which is, a lot of nobility when you're doing it right, a high opportunity for income, control of their time, control of their future. I think for me right now, this business serves our life very, very well. But what my wife and I get so excited about and what we dream about in the future is being able to hand this thing over to our kids one day.
Yeah.
A business that, is passively, residually generating a very significant income, and we get to hand that over to them one day. That's really what excites us right now. And so there's other people like me working, in our organization who are looking to achieve those same things as well.
That's amazing. So in terms of being able to now have your money work for you, when you kind of came on my radar, you were talking about infinite banking solutions.
Yeah.
So can we dive into that? Because
Sure.
it's a component where listening to it sounds amazing, hits the too good to be true mark.
Yeah.
But I left with a few questions like, what are the prerequisites to be able to get into it?
Mhm.
All of those things. However, like as a business owner, if I can minimize my taxation, yes, please.
Yes, please.
So let's talk.
Yeah.
Infinite banking.
Totally. Yeah, so infinite banking, and you've provided a great disclaimer. It's not necessarily suitable for everyone. So that's the first thing. The other thing that's important to understand is it's not a product, it's a strategy. Okay? And there's specific products we utilize to create that strategy. Okay? And so the products that we utilize in the infinite banking strategy is high cash value life insurance. And when people typically think about life insurance, they kind of compare it to car insurance, right? It's like this thing I have to have. If I don't die, I don't get sick, I'm just paying for this thing that I don't need.
Yep.
And, there can be some truth to that. But there's two reasons why people utilize life insurance. The first reason is to mitigate risk, right? You've got a young family. I can see them swinging in the swing back there. If something was to happen to you, your family would be put into financial hardship.
Yep.
Right? And so you utilize life insurance to mitigate that risk.
And that's how we're taught to look at life insurance, but there's more.
There is more. There are other Canadians, North Americans, specifically more predominantly wealthy ones that utilize life insurance as an asset class.
Yes.
Right? And it's just like stock market equities, just like bonds, fixed income, cryptocurrencies, real estate, precious metals. Life insurance is an asset class.
Okay.
And interestingly enough, getting back to our previous conversation, do you know who the largest owner of life insurance assets are in Canada?
The government of Canada.
It's actually our big banks, which is essentially the same thing.
There we go. The pillar of the government.
Exactly. And there's a reason why they own that asset class, because it's a very powerful asset class to own.
And they know the system.
That's right. So it's just kind of interesting to think about that, right? They don't actually sell a lot of insurance, but they own a lot of permanent insurance assets. So kind of an interesting thing. But essentially, getting back to the infinite banking. So what happens is people go, they utilize life insurance as an asset class. And the reason why people do that predominantly is because of the rules around life insurance. And the rules around life insurance are very, very favorable when it comes to taxation. Right?
Yep.
At the end of the day, it doesn't matter how much money you save. What matters is how much money you get to keep.
Yes.
That's the important number, right? And so once we understand that taxation is actually the kryptonite to wealth accumulation, then the question becomes, well, how do we avoid the taxation?
Yeah.
Right? We know we need to save our money somewhere.
Yep. Yeah, because tax season sucks. It hurts the heart no matter what. And even, I don't care who you are and you say, I love being taxed because it tells me I made a lot of money that year. It still hurts. Yes, you made a lot of money, but it still hurts.
Yeah, exactly. And making a lot of money is great. And I love seeing people strive for that. But at the same time, if you could create a situation where you got to keep more of the hard-earned money that you're making, would you not want to learn more about that?
Oh yeah, absolutely.
Right?
Yeah.
So that's because I've heard that from business owners too. It's like, well, Shaun, if I'm paying lots of tax, it means I'm making lots of money. Yeah, sure, Skippy, it does. But guess what? You deserve to keep more, and not only keep more, but get to have more.
Yeah.
Right.
Yeah.
And so when it comes to taxation, Lisa, there's 4 big taxable events that take place. We pay tax when we earn money. For employees, that's called income tax. For business owners, incorporated business owners, that's kind of a corporate tax rate, and then it's either dividends or salary or whatever that looks like there. But we pay money when we pay tax when we earn money.
Yeah.
Then we go to invest money, and when that money grows, we pay tax on that again. Right?
Yep.
Then when we go to utilize that investment, we go to withdraw that investment, guess what? We pay tax on that again.
Yeah.
And then just when you think you haven't paid enough tax,
you die.
You pay tax again when you die.
Yep. Which is mind-boggling. Like, how dare you die?
Yeah. Yeah, right? Yeah. So the infinite banking strategy allows especially the incorporated business owner to mitigate the first one and eliminate the other three.
Which, like, that's the too good to be true situation.
Right.
So how does that work?
Yeah. So when it comes to investing money in life insurance assets, it all grows tax-free. So we don't pay any tax when the money is growing and compounding and getting a rate of return. We don't pay any tax during that period of time. Okay. When it comes to accessing the money tax-free, what the most powerful thing to do with a life insurance asset isn't to actually withdraw the money, it's to leverage and borrow.
Okay.
Right? And so, for example, like my wife and I, we have quite a few life insurance assets sitting inside our corporation.
Yeah.
And we're squirring away a lot of money every month into those policies. In our retirement years, what we're going to do is we're going to borrow the money from those policies, right? Okay. We're not going to withdraw it. We're going to borrow it.
Yeah.
And because we're borrowing it, guess what? It's tax-free.
Yeah.
Right? So we're going to borrow that money tax-free. And then, oftentimes people are like, well, Shaun, I don't want to be in debt when I retire. And again, you just have to shift the mindset, because this isn't about you being in debt and needing to pay debt back. You're not going to pay any interest, and you're never going to pay back the loan. Mm-hmm. Because eventually what's going to happen, whether you like it or not, you're going to die.
Well, yes.
The death benefit from that life insurance is going to go pay back all of the loans, all of the interest, and essentially you're going to have the ability now to utilize all that cash tax-free.
Okay, so you're leveraging off of the death benefit of the life insurance policy to be able to... Not quite. Okay, so sorry.
You're leveraging off the cash value inside the life insurance policy.
Okay.
And you're using the death benefit to pay back all the loans.
Okay.
Right? And the reason it's called infinite, Lisa, is because you're borrowing that money.
Yes.
Right? You're not withdrawing it. So if I've got $500,000 of cash value in my life insurance policy, I borrow $100,000 of that.
Yep.
I'm off doing whatever I want to do, spending that $100,000. Guess what's happening to the $500,000 sitting in the cash value life insurance policy?
It's still growing.
It's still growing and compounding, even though I'm out there spending $100,000.
Okay.
So next year or the year after that, when I come back, I actually now have $600,000 of cash value in my policy. So I'm going to borrow another 100, tax-free, leave the 600 in there. It's going to continue to grow and compound. And I now have this infinite cycle of borrowing money while it's compounding, coming back a year later, and rinse and repeat, rinse and repeat, rinse and repeat.
There we go. So then you could almost, as a business owner, use that as your annual income, correct? And then your dividends from your business could go into to boost that policy over time.
100%. Yeah, there's a bunch of different things that we could do. I mean, but the powerful thing about utilizing a corporation, when you mention dividends, we use dividends to take money out of our corporation. Yeah. Right? And it's probably the most tax effective way to do that if you have a Canadian corporation.
Yeah.
But the cool thing about this life insurance asset is it actually sits inside the corporation. So you don't have to pull money out of your corporation in order to fund it. This is where it's very powerful for the incorporated individual, because you get to use pre-tax dollars to fund your investment.
Perfect.
Right?
Yeah.
So you're not, you don't need to worry about taking money out of your corp to put into here. You're essentially taking pre-tax dollars, investing it into this program.
Yeah.
It's growing tax-free. Yeah. And then you are going to utilize the money down the road tax-free. And then at the end of time, when you go to pass away, the money goes to pay back those loans, and the rest of the money goes to your family, to your kids, completely tax-free.
What a way to remove a burden from your family alone.
Totally.
Like, it's already hard enough time having to deal with that loss, but to be able to remove that additional procedural burden from your family. What a gift.
Totally. It's scary. It's such a powerful way to create generational wealth. That's why, again, talking about kids and all those kind of things, this is it's kind of a crummy story that I share with people just so they understand the power of this program. But I had a client in Alberta who was an oil and gas engineer, worked very hard all his life, made a lot of money, and he had saved $1 million. He had saved and invested $1 million inside his RRSPs. When he passed away, those RRSPs went to his wife tax-free. That happens, that's fine. But then his wife passed away.
Yep.
And the very first thing that happened was a provincial and federal taxable event.
Yeah.
And so by the time that $1 million in RRSPs went from mom to the 2 kids, each kid was left with $220,000.
Man.
Mom and dad saved $1 million inside those RRSPs. They didn't spend any of it, and at the end of the day, their kids got 220 grand. Less than half.
Each, or total 220. So they got a quarter. Each. So they got a half of $1 million.
Yeah. Just under a half, right? 46%.
It's like robbery.
It is, right? Yeah. Whereas if they would have had $1 million in life insurance assets and then they would have passed away, guess how much money would have went to their kids tax-free?
I don't know if I want to know. It might be depressing.
$1 million.
Yeah.
The full million.
The full
right?
million.
100% tax-free. It doesn't go through probate. It doesn't go through estate. Nothing. It is 100% in the hands of the beneficiary within like 14 days.
Wow. So like for farmers and ranchers, this is something that they should really be considering, because most of them operate their ranches and farms as a corporation. And so in terms of generational wealth, ensuring that even like safe land transfer and all of those things can happen, this is a great way to, I don't know, pad your bets a little bit.
100% it is. 100% it is. It is, because what do we know can change? Governments can change the level of taxation all the time. They can change the rules, right? They can change this, that, and next thing. The beautiful part about insurance is it has a grandfather clause. Okay. So even if today the federal government was to say, we're going to start taxing life insurance, death benefits, well, all of the contracts and policies that are in place prior to that have to get grandfathered. So they can't go back and change all that, right?
Thank God.
So you are locking in and guaranteeing your ability to transition wealth to your future generations 100% tax-free.
In perpetuity. Yeah, I can't say the word, but for a long time.
For a long time.
That's amazing. So, and I was going to ask you, I'm like, can they change the rules around life insurance? So you just answered that question. That's amazing. So, okay, I'm incorporated. What do I need financially in terms of value or amount to be able to get into this and start really saving for the future and for that thing swinging in the background?
Well, the really nice thing, Lisa, is that it's scalable.
Okay.
So you can start small and slowly build it up over time. Mm-hmm. So if you have a corporation right now and that corporation is earning money, right, we can support you in taking those pre-tax dollars, or I should describe them as tax efficient dollars. Yep. And utilizing this to start saving money tax-free.
Incredible. So there is no like base amount. It's just if you can get started, get the policy, the rules change.
Yeah, exactly. Yeah, Lisa, the number one thing that stops people from utilizing this strategy is their inability to qualify for insurance.
Okay.
That's the thing. Insurance is a privilege. It's not a right.
It's true. Yeah.
I can guarantee you that I can open you up a tax-free savings account. I can guarantee you that I can open you up a RRSP or a non-registered. That's a guarantee. It's your right as a Canadian.
Yeah.
But I can't guarantee that you're going to be able to get a life insurance product until we go through the process of an application and you're approved.
Okay, so what is that process for people who have never gone through this? What is that process to be approved for?
It's very simple and straightforward. So what we would do historically is we would sit down with someone and really have a conversation around, why are you utilizing insurance? Because a lot of people, I think about those beautiful kids swinging in that hammock behind you. You have an insurable need. right?
Yep.
So you have a need to utilize insurance to mitigate risk, but you also want to utilize insurance as an asset class. And so what we can do is we can blend both of those things for you.
Okay.
And so step one is really sitting down and getting clear on what you want your life insurance products to do for you.
Yeah. Not just cover should I pass.
That's right.
Okay.
That's right. And so once we get clear on that, then, the nice thing about our organization is we don't own products. So I have nothing to sell you. And so from there, what we do is we shop the market and we go to all the insurance companies. We say, hey, listen, here's Lisa. Here's what she's looking for. What can you offer her? Okay, great. Thank you. We'll go to the next company. Same thing. Hey, here's what Lisa's looking for. What can you offer her? Then we bring those back to you and we say, okay, Lisa, here's what this company's going to offer. Here's what this company's going to offer. This is the pros. This is the cons. These are the benefits. How does that resonate with you?
Yep.
You say, you know what, Shaun, I want that one. That one makes the most sense for me and for what we want to do. We say, awesome. We help you get qualified for that product. And then the best part about, our business, speaking very biasly, is those companies turn around and pay us.
Okay.
So none of our clients' money ever goes directly into our pocket.
Because you operate as a broker.
Because we operate as independent brokers. That's right.
Okay. So then I have life insurance.
Yeah.
I'm paying on a monthly fee to go into the kitty for savings, but we want to make this switch. What would be step one for us to take to be investigating into this switch and taking what we currently have? Do we keep it or do we just try to cancel it and move everything over? And what happens if we cancel?
All great questions. And so what we would do is we would sit down with you, we would take a look at your policy, we would help you dissect it because, it's funny, most people that have insurance 6 months later don't even know how much they're covered for, let alone what type of coverage, where's the money going? What does it look like down? So we'd help you dissect that. Okay. And if you have a great product already and you're qualified and it's sitting there, then really what we would just do is we would coach you on how to maybe make some changes with that product to maximize its opportunity. If it's not the right product or you need something different or better, then again, we would help you shop the market, maybe adjust what you have, add something else to it. It's very situationally dependent.
Okay, amazing. But you go through, you just meet the client where they're at and then try to work to find the best solution, the best scenario to be able to get them into an infinite banking solution that would work to their advantage.
Yeah, 100%.
Okay, amazing.
100%.
So then, is there a way that you can legacy your life insurance, this product, into your family? So say, the finances in terms of inheritance or whatever is not necessary should you pass, but you want to be able to continue this package, this concept for the next generation. Is that a possibility?
Yeah, it's interesting. What you're describing is how the Rockefellers became the Rockefellers. And what they did was in the Rockefeller family, you see, most families can't pass wealth beyond 1 or 2 generations. And so what the Rockefellers did was every single time someone in that family was born, that individual, and you can qualify for insurance once you're 15 days old.
Yes.
That individual, they purchased a high cash value life insurance policy, put it into the family trust, and they just kept doing that again and again and again and again. And so as the generations moved along, people started passing away, that trust started gaining all of these tax-free death benefits, and
it builds.
It builds, exactly.
Yeah.
And so
for
someone that wants to create and build that generational wealth, I would say, let's make sure that you're covered and that your wealth is being transitioned to your children tax-free. But let's also set up your children now so that they have 60 plus years of time and money compounding so that when they pass away, right, they've gotten the wealth from your policies and now their kids are going to get the wealth from their policies.
Yeah. Can you imagine the growth, like you said, compounding interest for something like that when you are setting up your 15-day-old child with life insurance?
I am privileged to be able to say that I have and I can, because that's exactly what my wife and I did.
That's amazing. And for most parents, the parents are insured. Rarely do they consider insuring their children until they're maybe 18.
Again, it comes down to the education, right? People are like, well, Shaun, I don't want to benefit if my kid dies. It's like, no. First of all, listen, that's not what this is about.
Yeah.
Right. But I mean, make no mistake, if the absolute worst case scenario was to ever happen, which let's be honest, that is the worst case scenario for any parent.
Yeah. Yeah.
Are you going to want to go back to work? Are you
Nope.
going to have to worry about bills, pay, right? You're not, right? Obviously. So there is that factor there, but that's not why we're doing it for our kids. There's two big reasons we're doing it for our kids. First and foremost, we are locking in and guaranteeing their insurability for the rest of their life.
Yeah.
My kids are never going to have to worry about qualifying for insurance ever again because they've had the product in place since they were 15 days old.
Yeah.
Right? And it seems crazy, but like I said before, insurance is a privilege. It's not a right. And I unfortunately have seen kids, teenagers that can't qualify because of family history, their medical history, all those kind of things. So our kids are never going to have to worry about that. They are locked in for the rest of their life.
Yeah.
But the other big reason is because we're putting time and compounding interest in their favor, right? And it's not a significant amount of money, right? It's like $100 a month. But if we
the younger you start, the cheaper. So,
that's right.
Yeah.
And so out of the $100 a month, 12 of it is going to cover the cost of their insurance.
Mm-hmm.
The other is going into an investment.
Yep.
That's growing and building tax-free.
Yeah.
And so we extrapolate that out into their retirement over 60 years. And now they've got a 7-figure tax-free investment that they can utilize in their retirement.
Man, what a way to really just circumvent the frustration of, say, they're self-employed and not incorporated and avoiding the CPP and the EI payments, right? Like just being able to know that you have a retirement so you don't have to be working to save for the retirement.
Totally. Yeah. It's and I mean the thing is they can continue to add to it. Like what our plan is to, you know, whenever we deem our kids responsible, I don't even know when that's going to be, but you know, maybe they're 25, maybe they're 30, who knows? We're going to hand them over these policies, right? Because right now they're the insured.
Yeah.
Heidi and I are the owners.
Yeah.
Right. And so we're going to hand ownership over to them and say, listen, guys, like there's a decent chunk of money in here right now.
Mm-hmm.
If you need a down payment for a house, you need to start a business, whatever, there's the cash there. But let's explain and let's get clear on really how powerful this is. Your insurance is paid up for life. Yeah. And so now if you, as the 25-year-old working adult, want to start dumping $200 a month into this thing, that's all going to the investment. Yeah. And here's what that's going to look like for you by the time you hit 60.
Amazing.
Yeah.
Yeah.
Yeah. And the tax man's not going to get a red cent of any of it.
And you know what? Nowadays, with the amount that we get taxed, it's almost 67%.
It's crazy.
It's insane. Like, yeah, sorry, tax man. No, this is my money. I have earned it. This is what makes me live. And it's nice to be able to set boundaries around that and know that you can set boundaries around that.
Totally.
And now, if you do it now, you're protecting your child for whatever instability may happen leading up or in the future. Yeah.
Exactly right. Exactly
That's
right.
incredible.
You know, this might be another good nugget for your listeners. There's a book written by a man named David Voth. Mm-hmm. He was an ex-accountant for the CRA.
Yep.
And he wrote a book entitled The Top 10 Things the CRA Doesn't Want You to Know About.
This one's one of them.
Guess what's in there? Life insurance.
100%, right? Yeah, absolutely. Especially if the banks are already using it and the top holders. Yeah. They know what's up. So
Totally they do.
It's, you know what, in the same thing, it comes down to if you got to put yourself in the rooms of the people that you want to become.
That's right.
So start learning, what do wealthy families do? What do wealthy corporations do? How are they functioning? How are they saving their money? How are they spending their money or not spending their money?
Yeah.
And how have they set themselves up for that wealth? And some are incredibly open about it. Others will hide it and be sneaky. However, you can find that information as you've laid it all out there too.
Totally.
So.
Yeah. Success leaves clues.
100% does. Yeah. Right? I remember, like, this is unrelated, but food is a language for me. And my dad always said, if you want the best Chinese food, you've got to go where the Chinese people are. And
yeah, 100%.
That's true. So it's the same thing here for finances.
Yeah. And you know, my experience in having opportunities to talk to lots of successful people, Lisa, is they are very open. Mm-hmm. Because most of those people, got successful by doing exactly what you just described. They got into rooms of other people that were successful, right? And so they got kind of that helping hand up. And if you watch even those people that you see online, who are successful, so many of them are providing so much information for free. And they're open just to sharing, hey, here's how we did it. Here's what we're doing.
Yep.
And so there is lots of that out there, but getting into the right room is very important.
Yep, definitely. And honestly, it would be reaching out to someone from World Financial Group, yourself, another advisor, even another insurance provider to start asking these questions. And even your financial advisor, don't be afraid to ask them about these options that are available and how you can make it work for you. Yeah.
You absolutely need to. You have to take charge of that. You have to be asking the questions. You have to be saying, hey, advisor, I learned this. I want to know more about this. How can we make this work?
Yeah.
Right. You can't be waiting for people to come and just think that, they're going to knock on your door. Like you have to take charge, take responsibility of that your financial future and be asking the right questions for sure.
Yeah. And advocate for your future, because your future is not just you. It's likely your family more so.
Totally.
Yeah.
Totally.
Beautiful. This is amazing. Is there any other tips or guidance that you would like to leave my listeners with?
Yeah, I think, the stuff that we've talked about is really the foundation, right?
Yeah.
Find, get yourself connected to someone that you trust, a human being that can provide you the education, the resources, or choose to take that on yourself, learn it yourself, go through a mentorship program, learn it, but don't take action today, right? The difference between a thought and a decision, the decision is followed up by immediate massive action. And so make a decision that you are going to take charge of your money game. Mm-hmm. Start asking questions. It's not going to happen instantaneously, but start asking questions. Start meeting with those people. Start saying, hey, what about this? How does this work? This is what I want. What can you do? How can you help me? Right? Teach me this. You have to take charge of that as an individual. And I just really, really encourage people to do that.
Yeah. And I adore how passionate you are about this and how passionate you are about telling people about this and educating. And from a paramedic to now this passionate financial literacy guide, if you will. It's really amazing seeing that amount of energy coming out of you when you're talking about this and how you're just wanting to help so many Canadians and North Americans to be financially secure in their future.
I appreciate that, Lisa. I appreciate that a lot because it really is the truth. My wife and I are very, very focused on, we're going to grow and scale this thing because we didn't come here to take part. We came here to take over. And we're going to make this better for middle-class Canadian families, one family at a time, because they need it and they deserve it. And we live in what should be the best country in the world, bar none. And our level of financial literacy is so low. And we're going to help fix that. We're going to help change that. So if anyone is looking for some help, if they need someone to talk to, make sure you reach out to us. We will find you someone. If you want someone local, we know great people all across the country, and we'll connect you with someone that you can have a conversation with because, the time is now. It's not next week. It's not next year. It's not when you turn 40, when you turn 50. The time is now to start having these conversations and put yourself in charge. So the system isn't working you, but you are working the system.
Yeah. Yeah. And I would leave with don't hold any shame around what you don't know.
Great point.
There's so many things that misteaching us, and there should be no shame about feeling insecure in your financial situation or not.
Thank you so much for sharing that. That is such an important point. And I think that actually holds a lot of people back too.
Yep.
Is they're worried to have a conversation because of, the mistakes they may or may not have made or their debt or their income or whatever. It doesn't matter. You're never going to be shamed here. You're never going to be looked down upon. And what I know to be true is that you are most likely in that situation by design. And it's not because you're just a bad person or you're dumb. It's because the system has shown you that path. And don't for a second feel bad about that. And let someone help you understand how to get the system working for you rather than the system working you.
Yeah. 100%. Here. Let's go. I agree, Canada. We are a blessed country. We should be among the richest in the world. We're going through a struggle point right now, but there is no reason why we can't turn this around.
Sing it, sister. I love it.
Thank you so much, Shaun. I really appreciate your time here on Ramble, and this has been wonderful. Thank
Awesome.
you.
Happy to help anytime, Lisa. I really enjoyed this. Thanks for giving me an opportunity to spend some time with your community. I really appreciate it.
Of course. Absolutely. Good luck with everything.
Thank you. You as well.